our ongoing webinars. Tonight, we're going to talk about choosing the right binary. A couple weeks ago, we talked about the basics of what is a binary, how does it work, the basics of how it works. Tonight, we're going to talk about how to choose the right one, because as you see, if you've been on the Nadex platform, you see there's a bunch of different binaries to choose from. Why would I possibly want to choose one over the other? So we're kind of taking that to the next step here tonight and going to talk about how to choose the right binary. So we're going to get up and going. I've got our recording set here. So welcome to the Nadex Application and Strategy webinar series. My name is John Skelton. I'm with apexinvesting.com. Apex is totally separate from Nadex. Nadex is an exchange. Apex, we are an online community of traders helping traders. We're an educational company. Let's get our disclosures knocked out here. As always, trading futures, options, or any financial instrument involves risk, may not be suitable for every investor. Information contained here in this website or in this webinar is the property of Apex, may not be shared or distributed without written permission. And the information here in this webinar is for informational and educational purposes only, and it's not an offer or solicitation of an offer to buy or sell any particular financial instrument offered by Nadex, and past performance not indicative of future results. So, speaking of Nadex, you hop on over to nadex.com. You can get some information here on these tabs above on what Nadex has to offer. Nadex basically offers two different types of products. They offer binary options and they offer spreads. Tonight, we're going to be focusing on binary options. Next week, we'll talk a little bit about some spreads. We're kind of going back and forth here and mixing it up between the two. But you can get some more information here. And then right here under the trading tab, if you hit demo trading platform, you can fill out a quick form, hit submit. All you got to do is select a username, fill out some quick personal details, and Nadex will give you a $25,000 demo account. In just a few minutes, you'll receive an email with a temporary password. You can log right in with your username and temporary password and have access to the demo platform, like I said, with $25,000 of demo money. That way you can get familiar with the platform, get familiar with binaries and spreads, the different products that Nadex offers, practice, entering and exiting orders, get familiar with the ticket system, and, test out any new strategies or systems that you may be checking out, as opposed to using your real live money for that. You always want to use your demo to play around, test something new with, get it mastered in demo before you move into live. So if you don't have a Nadex demo account, go ahead and do that now. Even while we're on this webinar here, it'll really help you follow through, because I'm going to be referencing this Nadex platform quite a bit tonight and showing you quite a few examples here. We've got some good PowerPoint made up for you here, but I'm going to also kind of show you some live examples of a few things, and we'll be utilizing the platform to do that. From there, another place you can get some good free stuff here and some good free education is hop on over to our website, apexinvesting.com. You can click right here under Join Free Now and select a username and password. Once you have that, again, that's totally free. You can log into the website and get free access to literally hundreds of hours of free education, step-by-step training courses, and so on. A lot of information on our site. Don't be overwhelmed by it. Just want to direct you to a few places here. Right here, our weekly webinar calendar. We do these webinars for Nadex every Monday night at 7 p.m. Eastern Time. You can sign up for those. We normally do some webinars on Thursdays. We have some radio shows throughout the week. Feel free to join us on any of those. A lot of good material, a lot of free information. We cover different strategies, systems, do some live trades, all kind of good stuff there for you that you're more than welcome to join in on with us at any time. Also right here tonight, like I said, we're talking about binaries. This tab right here called Binary Essentials. Some good information under this tab here. If you go down to the third one, you've got a lot of information right here. I'm going to be kind of referencing several of these tonight. This is a handful of step-by-step training courses on a couple of different systems that we use to trade Nadex binaries, okay? And some of these here are utilizing out-of-the-money binaries. Some are using in-the-money binaries. If you're not sure what those are, that's what we're going to talk about tonight, okay? What is the difference between the different binaries that you have available to you as different options? And these are some step-by-step training courses. You can go through and take a look at them and see which one kind of works out the best for you here. and best fits your particular trading style or needs. Another big important area to draw your attention to right here under the questions tab. The second one down is Trading Questions Forum. Okay, and somebody's already asking, I assume this presentation will be posted tomorrow. John, I'll show you where you can get a copy of it here on our website later tonight. I'm not sure if Nadex will have it up by tomorrow. I send it to them after the webinar. They should have it up here in just a couple days. But otherwise, if you're on our website, go to that questions tab, Trading Questions Forum. A lot of good information here in the forum. It's kind of broken down into different sections, kind of S1, S2, kind of section 1, section 2. Good information about trading mentality and psychology, risk management, underlying markets. But if you go down here to S10, another section here covering all the different trading systems that we use, step-by-step courses, screenshots, written out rules, and some good back and forth forum discussions between our members here. Great way to really dig in and learn some of these systems and get an idea of what they're all about. But if you scroll down a little bit further, you'll see right here, watch webinars here, right here under newest webinars. So yes, tonight's webinar is being recorded. I will have it posted here under newest webinars later this evening. If you've missed any of the last few weeks' webinars, you can catch them all right here. Okay, Monday Nadex webinars, basics of spreads, Nadex binaries 101, swing trading, all kind of different things here. And tonight, we're not going to really recover binaries 101, the basics. We're not going to spend a lot of time on that. If you're brand new and you're not really sure about binaries or not familiar with Nadex binaries, or if you missed us, you weren't with us a couple weeks ago, you won't be totally lost tonight. You'll still understand what we're going to cover. But if you need to go back and review some of the basics of binaries and how they work, go back and watch this one right here that we did 2 weeks ago, okay, on December 7th, Nadex Binaries 101. Okay, walks you through all the basics there. In that same section there under Watch Webinars here, it's just a whole library of information here. Nadex Binary Webinars, Nadex Spread Webinars, getting started with Nadex, Nadex Platform, how to use the platform, how to enter and exit orders, all kind of great information here. So if you're a Nadex binary trader or a spread trader, check out all the different webinars available to you. Just right here under Nadex binary webinars, in the money and out of the money, nighttime strategies, trading the 20-minute contracts, trading part-time, strangles and butterflies, directional and scalp trading, all kind of great webinars here for trading Nadex binary. So hop on and get your free Nadex demo account and hop on over to apexinvesting.com, get your free membership there and get access to some good free education, okay? While you're at that, also hop on over to facebook.com/apexinvesting. Like us, follow us on Facebook, post some good information here about trading strategies and systems, any upcoming news you need to be aware of, any upcoming webinars, webinar recordings, trades from our trade room, all kind of great stuff that you can keep up with, and follow us there at facebook.com/apexinvesting. Just a easy place to kind of keep up with everything and get notifications of anything upcoming that you want to be aware of. All right, so take advantage of those tools. So tonight, choosing the right binary for your strategy. What is an OTM? Stands for out of the money. ATM stands for at the money. And ITM stands for in the money. So unless you're familiar with options or familiar with binary options in particular, you might not be sure what those terms mean. We're going to talk about those tonight, and I'm going to explain those to you and show you some examples, talk about the different expirations, time decay, and premium, how to choose the right binary, okay? So like I said, we're not going to be recovering all the basics tonight, but I showed you where you can watch a webinar on that if you need to catch up on some of the binaries 101 type stuff. But in a nutshell, a Nadex binary, what is that? What is a Nadex binary? We're just going to do a real quick review here, not real detailed. Well, if we're on the Nadex website here, okay, as you know, over here off to the left-hand side is a list of the products that are available. All right, we've got indice binaries. What are indices? Those are stock indexes like the Dow Jones, the S&P 500, the NASDAQ, okay? Forex binaries and spreads. What is Forex? Well, that's foreign exchange, foreign currency pairs, the Aussie dollar, the euro dollar, dollar yen, right? And we've got commodities. What's a commodity? Well, a commodity is copper, coin, corn, oil, gold, silver, okay? Something you can actually hold in your hand and drop on your foot, an actual commodity, right? Those are the different options that Nadex has for binaries and for spreads. Again, we've got commodities, stock indexes, we've got US stock indexes, and overseas stock indices as well, okay? So, for example, we're going to look at Forex tonight, and let's just look at euro dollar. All right, and as you see here, there's different expirations available. We've got binaries that opened up at 6 p.m. that will expire at 8 p.m. We've got binaries that open up at 7 p.m. and will expire at 9. Here at 8 o'clock, we'll have some new ones that go 8 to 10 every 2 hours. There's some dailies that expire at different times all the way through tomorrow afternoon, and then there's weekly binaries. So for example, if we just click this 6 to 8 right here, this is going to pull up and show us all the options available that expire at 8 p.m. Okay? Each one of these right here is a different binary option contract. All right? And we can look at them, and what is that? What is a binary option contract? Well, it's very simple. This contract right here states the euro dollar will be greater than 1.0915 at 8 p.m. Okay? Right now, you can see the Nadex indicative. This shows what is at currently. Currently, it's at 1.09124. All right, so that's simply all a binary option contract is. It's a statement. It's yes or no, 0 or 1, true or false. So if I open this and I click this, this contract states the euro dollar will be greater than 1.0915 at 8 o'clock. If I say yes, I think that statement is true. I think that will be the case. It will happen. Yes, then I want to buy it. Okay, the offer side is what I can buy it for. The sell side is what I can sell it for if I say no. So if I think yes, this statement is true, it will happen, I want to buy it, saying yes. If I don't think the statement will be true and I think it will be less than 0915, then I want to sell it. Okay, and it's that simple. These are different binary option contracts, and they all have different strike prices, meaning the price that's listed right here. Okay, and as you see here, for example, in the euro dollar, they're 4 ticks apart. Okay, 35, 31, 27, 23, and so on. And you can also see they're priced differently. Okay, we're going to talk about that. So with the Nadex binary option, at expiration, if I held this binary contract until 8 p.m., and it expired true, and I had bought it, well, then it would be worth, at expiration, a binary contract's either worth 0 or it's worth 100. So if I bought it saying yes, the statement would be true, and I was right, then it is worth $100 at expiration. Okay? If I bought it saying yes, the statement is true, it'll be greater than that, and it was not, then it's worth 0. So at expiration is worth 0 or 100. It's either yes or no, right or wrong. Okay? And whatever I buy it for, this offer side is the price that I can buy each different contract for. So if I bought this one right here, right now for $52.75, and it expired in the money, the statement was true, then it's worth $100. Okay? If I said, nope, I don't think it will be, and I sold it for $45, and I was right, and expired below that, then I would get $45. I would get what I sold it for. Okay, so there's different binary contracts to choose from. Okay, now let's talk real quick about the pricing. For example, if I pull up this contract right here, I can buy right now, I can buy this contract for $28, $29, or I can sell it for a little over $20. Okay. That's what's called the bid-ask spread. That's the difference here. I can buy for this price, I can sell for this price. Okay? So, if we look at kind of the mid-range, what do I mean the mid-range? Well, I mean if I add 20 and 28 together, what do I get? 48, right? Well, if I divide that by 2, meaning because there's 2 different prices here, that comes out to about what? About 24, right? So we can look at that, we call it the midpoint. We can look at that and consider that to be the probability of this binary expiring in the money, okay, based on the price. So that means this particular binary option probably only has about just looking at it without looking at a chart or looking at what the market's doing, just looking at the pricing, okay, the way that it's priced, gives it about a 24% probability of expiring in the money. Why is that? Why does it have only a 24%? Well, we have to look at the contract. What is this contract saying? That the euro dollar will be greater than 1.0915. Okay? Well, where's the market at right now? 0910. So this contract says it's got to be above 915. Right now it's only at 911. So for this contract to expire in the money, true, what has to happen in the market? If I were to buy this and say, yes, the euro dollar will be greater than 0915 by 8 o'clock. Well, right now it's only at 0911. So what has to happen in order for this statement to expire true? Yeah, the market has to move up like 4 ticks, right? Okay, so that's why technically just on the pricing model, that's why it only has a 25% probability of expiring in the money, because the market has to move, and the market has to move which direction? Up, right? Because if it's only at 0910 and we're saying it'll be at 0915, something has to be giving us an idea that the market's going up. Whatever strategy or system we're using, whatever charts and indicators we're looking at, something has to be telling us it's going to go up for that to be profitable and expire in the money, right? Okay. Now, let's take a look at a little bit different one. Let's look at this one. Wow, this is a big difference. I can buy this one for 78 or sell it for 70. This one's quite a bit more expensive, right? But we're also looking at closer to a what? About a 74% probability just in the pricing model, right? Well, why does this one have such a higher probability? Well, because what we're saying is that the market has to be over 0907. Got to be greater than 0907. Well, right now it's already at 0909, almost 0910. So it's already higher, right? I mean, it's already in the money. As long as the market stays above it or keeps going up or even comes down a little but not all the way down to 0907, this will still expire in the money worth $100. That makes sense? So that's why it's priced a little bit higher, because it has a higher probability because the statement's already true. Okay, everybody follow that? Now, let's take a look at this one right here. This one is, hold on, let me just look at a couple questions here. Bid-ask spread. If I can, yeah, Mike, they all have bid-ask spread. That's what you see right here, the difference of what you can buy for compared to what you can sell for. And your bid-ask spread is always going to be a little bit wider during like evening hours or when there's not a lot of volatility, a lot of movement going on with the market. That's just how options work, not just binary options, but any options. Like during the daytime, you might see this a lot tighter. You may see it only like, you know, $4 or $6, or it changes based on the, you know, volatility of the market there. So yeah, if you're looking at scalping strategies, you know, you might want to look at, you know, times or options that have a tighter spread, or you're expecting a little bit bigger move there. Okay. Let's see here. No, there's not really a difference there based on the moneyness either. Okay, it's all has to do with the the volatility of the market, what's going on. Okay, so let's take a look here. I want to show you. Now let's take a look at this one. What is this one priced at? 49.58, pretty close to $50, right? Well, what is this strike price? That the market would be greater than 0908. And right now the market's at 0909. It's very, very close. When your strike price is very, very close to right where the market currently is, let me see if I can show you another example here. You're going to be priced right around $50. Okay? And well, why is that? Why would that be? Here's another kind of example. 132.14, the market's at 132.15, pretty close to 50 bucks. Well, because if the market is right at the same place as the strike price is, well, it's kind of about 50-50, right? Yeah, David, exactly. It's kind of equal chances, right on the fence. Is it at expiration, is it going to be worth 0 or is it going to be worth 100? Well, we don't know. It's kind of 50-50 right now. Okay, so that's what we call an at the money binary. Does that kind of make sense a little bit here when you're looking at how these are priced? Well, why is this one priced right in the middle around 50? Well, the mark is at 132.14. The strike price is 132.14. So it's kind of right in the middle between 0 and 100. Because the closer we get to this binary expiring, the closer it's going to get to being worth either 0 or 100, right? So the reason this one's priced right around 50 when you average them out, because the market's right there. It could go either way. This one up here, why is this one only priced at 8 bucks? Well, because it's at one, you're saying the market has to be greater than 132.34. The market's only at 132.15. So the market's got to move a lot. So that's why this one's priced so low, closer to 0, because it's not a huge chance without, looking at something on your chart that's telling you the market's going to move up, of it getting there. It has to move. Why is this one priced way up here at $89, closer to 100? Well, because this statement's saying the market has to be over 132.04. The market's at 132.15. It's already above that. It's 9 ticks above that. So it's got a higher probability, so it's priced closer to 100. Does that make sense there? Why some of these are priced lower? See, if you're new to binaries, you just know, okay, well, it's either worth 0 or 100. So, wow, I can buy this one for 5 bucks, and if it expires, then I'll make, it'd be worth 100. Oh, I like that. I like those odds. I want to just start buying these $5 ones. Well, a second ago, we talked about probability. So if you're buying this $5 or $8 one, you're buying something that has a what? 5 to 8% probability of winning, right? Do the math, that doesn't work out for you. Okay? That doesn't work out just to randomly go buy something because you like the price of it. There has to be a reason behind it. Okay? So, in a nutshell, that is a binary contract. That is why there are different binary prices. Okay, so first one we're going to talk about, we just covered a little bit, is an at the money binary, or ATM. In the world of binaries, you'll hear these terms a lot, so you need to know what they are. ATM means at the money, priced approximately around $50. Okay, and let's look at something here. So right now it's about 7:30 Eastern time. Okay, so let's pull up, let me just try to find, let's see here. Okay, so for 9 p.m. expiration, let's look at these that are priced close to 50 bucks. This strike price is $48.93. What is the current market at? $48.92.5. It's right around 50 bucks, just like I said, right? That's expiring at 9 o'clock. What about some that expire in the middle of the night at 3 a.m.? Or let's even look at some that are tomorrow at 7 a.m., hours and hours out. Okay. Closest one right here, 4,900, 48.92. Okay, this is in the 40s, pretty close to 50. That's just the closest one there. What about weekly, expiring at the end of the week? Well, 48.75, 48.92, that's the closest one. Okay, see how these are much wider, the weeklies? It's priced close to around 50 bucks. Let's look at something that's not even Forex. Let's look at some indices. Let's look at the Dow, all right? And let's look at tomorrow afternoon. Well, the Dow right now is currently at 17,198. This strike price is 17,190. Pretty close. Look, right around 50 bucks. All right, what about the weeklies? End of the week. Well, remember the Dow's at 17,198. What's the closest strike? 175, right around 50 bucks. So it doesn't matter if it's expiring this hour, next hour, tomorrow, or at the end of the week. If the strike price is close to where the current market price is, an at-the-money binary is always going to be close to around 50 bucks because it's still kind of right in the middle. No matter how much time you have, whether it's an hour or a week, an at-the-money binary is going to be priced around 50 bucks. Okay? So with an at-the-money binary, like I said, it's when the strike price is close to the current market price, and that means it's just kind of right in the middle. And as the market gets closer to expiration, as the binary is closer to expiration, it's got to start being worth closer to either 0 or 100. So even just a little bit of a movement, a little bit of a difference at expiration can mean the difference of whether that binary contract expires in the money or out of the money, expires true or false. Okay, because even if you're off by 1/10 of a tick, see right now when there's a little bit of time to expiration, it's around 50 bucks. But at expiration, when that thing expires, it has to be exact. Meaning, right here, if we look at some Forex, let's look at euro dollar tonight at 8 o'clock. Right now, this binary right here, binary contract to be above 0911. Right now the market's at 0910. Well, if the market expired right now, well, see, right now, it's above 0911. But what if it went down to 0910, just one tick, would mean the difference of 0 or 100. Okay, so right now, since we've got a little time, it's still kind of right there on the edge, but right at expiration, as it gets closer to expiration, it has to start moving quicker towards 0 or 100. And when it expires, it has to be above 0911, and it'd be worth $100, or if it's 0911 or less, it'd be worth 0. So you always know that an at-the-money binary would be worth about 50 bucks, okay? But if you're going to be trading whatever trading strategy system you're using in charts and indicators, if you're going to trade them, you have to know and realize that at expiration, just that 1/10 of a tick comes down to it being worth 0 or 100 at the time of expiration, okay? And whether your strategy or system is holding something till expiration or getting out early. Most of the binary systems and strategies that we teach, we hardly ever hold something till expiration. We get out of it early. You know, if I were to buy this, for example, right now for 66 bucks and the market keeps moving up or time gets close to expiration and it gets, you know, up here and say I can get out of it like 92, bam, I'm going to get out of it at 92. I'm not going to hold it till the end just to get another 8 bucks. What if the market comes back against me? Or what if it gets really close and it only wins or loses by one tick? I'm not going to be greedy about a few bucks. If I can get out at 92 or 95, I'm going to get out and take it. Okay? So with Nadex binaries, you can hold them till expiration, or you can exit them early and get out and take your profit. Or if you buy a binary and it's going against you and you don't want to take your full loss, you can get out of it early. You don't have to take your full loss. Okay? You can hold to expiration or you can exit early. All right, now some people say, what do you mean exit early? I've never heard of that with binary options. Well, that is one of the unique things about Nadex is that you can do that. If I were to go in right now and I want to buy this binary right here, okay, and so I bought it, boom, it pops up right here in my open position. So I bought it, right? I'm in the trade. See, +1 means I bought it. If I'd sold, it would say -1. So I bought it. Well, what contract did I buy? This one right here, the 10911, this one here. So I bought it. What can I sell it for right now? I can sell it for 56 right now, okay? If the market keeps going up and this price keeps going up and I want to get out of it, say when it's 80 bucks, great. Or if it goes down and it's only down when worth 20 and I want to get out of it, not to take a full loss, great, I can get out of it. So I'm in it. What happens? So I bought it. What happens if I want to get out of it early? Well, all I got to do is click it, ticket automatically pops up, already marked sell, and I click sell. And what did it do? It exited the order and sold it out. Okay? So I can hold to expiration or I can get out early. But that's what an at-the-money binary is. All right, so when you're looking at these different contracts here, first thing you got to understand is when you're looking at the pricing model, we already talked about how you can kind of look at that as a percentage of probability. Okay, and you kind of understand that a little more now. You get why, if the strike price is close to the same as the market, why it's around 50, right? You understand why one of these way up here, the reason they're so cheap is because they're so far from the market. Okay, and we're going to talk about those next. So that's an at-the-money binary, going to be worth around 50 bucks when the strike and the market are close to the same, whether you're looking an hour out or days into the week, whatever. An at-the-money binary will always be around 50 bucks. Okay, and you need it to be higher. So that would give you, just looking at a probability standpoint, like a 50% win rate, which is just break even. You need higher than that. So you can't just go randomly buy an at the money or sell an at the money saying, well, you know, it'll be 50-50. 50-50 doesn't get you anywhere. Okay, you have to be profitable. So you still have to use a strategy or system that's telling you some type of direction of the market. So you know, hey, all right, I can get into this binary around 50 bucks, so I can risk 50 to make about 50, and my strategy or system's telling me the market's going up, so fine, I want to buy. Fine, or fine, it's going down, I want to sell. Whatever it is, you still need to have a strategy or system behind it, letting you know which direction the market's going. Okay, let's see here. Steve says, is there always someone to take the other side if you exit early? Well, normally you can always get out of a binary. All you got to do is look right here. Again, this is the buy side, this is the sell side, and you can see how many contracts are available on each side. If I was to go buy one of these little $5 ones, no, there's no one over here to take it because no one's going to take that. You know what I mean? When you're looking at binaries, you almost always, right before expiration is what's called the dark zone, and that's when the market makers no longer quote, meaning they're no longer quoting these 50 or 100 size contracts. On your hourly binaries, it's normally the last 2 minutes. The last 2 minutes right before expiration, the market makers aren't quoting these big quantities. There'll be other traders that are out there, taking the other sides of trades. But like on the hourly binaries or the 2-hour binaries, those last 2 minutes, these big quotes are normally gone. I think on the 20-minute binaries and like the 5-minute binaries, I think it's the last 30 seconds. So unless you're holding it right till the end there, you should always be able to get out of it. And you can see right away what price you can get out of it for and how many contracts are there. And if somebody went in and took all 50 of these out, in just a few seconds, they'll replenish them with another 50. Okay? So another reason not to hold all the way to expiration is, to make sure that you're not holding in that dark zone so that you can always get out. All right. Let's see here. Okay, so that's at the money binaries. Any questions on at the money binary as far as what we're covering? Everybody understand what an at the money binary is? Where the strike price is right close to the same as where the current market is, and why that is priced at 50 bucks. Any questions on that in and of itself? Okay, so now let's talk a little more about OTM, which is out of the money binaries. Okay, out of the money binaries, we've talked about them a little bit already, but out of the money binaries would be considered basically anything priced under 50 bucks. Okay, meaning these here, like these $5, $8, $13, $38. Okay, and again, why are they out of the money? Well, we've talked about it a little bit. This contract right here states that the euro dollar to be greater than 1.0919 by 8 p.m. Okay, so it's got to be greater than 0919. Right now the market's at 0913. So the market has to move up 6 ticks, right, just to reach this strike price. Okay, does that make sense? So what has to happen? Why would I ever want to buy this contract? Right here, I can buy it for about 15, sell it for about 7, so it's got 11% probability. Why would I ever want to take a trade that only has an 11% probability? Well, I like the fact that I can buy this. Oh, look, my max loss is only 14 bucks and I can make $85. Ooh, I like that. We all like that, right? But what is the probability of this happening? Only about 10%, right? Which means I would win how often? That would mean I would win 1 out of 10 times, right? So that means I would lose 9 times. So if I'm going to risk $14.75 and lose 9 times, but I'm going to only win 1 time, but man, it felt really good when I risked $14 to make 85. Am I ahead or behind? I'm behind, right? I'm way behind. So a lot of newbie binary traders come in here going, yeah, I understand binaries. They're either worth 0 or 100. So, man, I want to risk $5 and make 95 bucks. That's awesome. I'm a trading god. Oh man, I remember that one time I did it. It felt so great. Well, what about the other 9 times? What about the other, what is that, 5%? What about the other 19 times you lost $5? Yeah, it doesn't really hurt you too much when you're going in and risking $5 and that didn't really work out, and risking that didn't really work out. You know, a few here and there, you just think, oh well, you know, I tried it. Yeah, David said it exactly. Go to Vegas instead, because all you're doing is gambling. Better odds at Vegas, and you get free drinks while you're doing it, right, David? I mean, 'cause that's all you're doing. If you're literally just going in and just randomly buying a binary or selling a binary because you like the low risk, the price, because you just love seeing this right here of, ooh, I can only lose $5 and I can make 95. Let's do it. I'm going to do that all day. Yeah, at the end of the day, your account's going to be negative. Just telling you, because you're not trading, you're gambling. Okay? Now, I'm not trying to tell you to never use these out of the money binaries. We trade them all the time. But my point is, you have to have a reason for it. Like this one right here. Okay, hey, I can buy it for $23.50. So my risk is $23.50. If it expires in the money, I can make 76 bucks. I like that. But why would I ever do it? Because the strike is at 0915, the market's at 0911. So, but what if I have my chart up and whatever indicators I'm using, whatever strategy or system I'm using is telling me that the market's going up? Well, then maybe I would want to look at that, right? What are we looking at right here? Euro dollar. So this strike price says the euro dollar has to be at 0915. Here's a euro dollar chart. Okay, let me just pull something up here real quick. What am I looking for? This right here. Okay, so right there, 0915. That's the strike price of that binary, right? This one right here, see? 0915. I can buy it for $17.50. Okay, well, we know that just looking at the pricing probability model, I don't want to just randomly buy this just because I like the numbers. That's not going to work out for me. I have to know there's a reason behind it. So whatever strategy, and I don't have indicators and systems on this chart, this is just basic chart. The market's down here at 0910. The only reason I'd ever want to buy this binary right here is because whatever strategy or system I'm using is telling me that the market is doing what? Going up, right? I have to have a reason to buy a binary up here. Okay, look at this. Let me put this into another perspective. For those of you that are like, oh, well, I just love trading these way out there binary. Okay. Ooh, I like this one right here. I only got to risk $5. Okay, the strike price is 0923. So what you're saying is that the market has to get up here to 0923 for that binary to expire in the money. So what possible reason would you ever, the market's down here, what possible reason would you ever have to want to buy this binary up here? There's only one reason, that whatever your strategy or system is telling you the market is heading up, right? So I'm not telling you don't do these out of the money binaries. You can do great with them, but you can't just go in and randomly choose one because you like the price. You have to have a reason for doing it, okay? Something has to be telling you that the market is heading up. Does that make sense? Otherwise, you're literally just going to be throwing away $5, $8, $32, just randomly just kind of tossing it out there, okay? Now, another thing. Let's say I was to buy this one right here for 30 bucks, saying that the market will expire above 0915. Well, before expiration, I'm not talking about at expiration. Let's just say I buy this one right here at 0915, okay, right here, and the market starts creeping up. And let's say before expiration, let's say the market gets there, boom, to 0915. What will that binary be worth? We talked about this, remember? When the market is at the same price as your strike price, what approximately is a binary worth? Not at expiration, but before expiration. 50 bucks, right? Yeah, JP, you got it. So before expiration, if the market gets up here to 0915, to this strike price, I know that this is going to be worth around 50 bucks. Remember, we talked about that. It's called an at the money binary. We looked at examples of an hour out, a day out, a week out, about 50 bucks. So what could I do? I could do what's called scalping, right? If I had bought it for 30 bucks and the market moved up and it's worth around 50, I could get out and take around a $20 profit, right? Because that's one of the key things of understanding those at the money binaries. When the strike price is right around the same price as the market price, it's going to be worth close to 50 bucks. So if I were to take an out of the money binary, like around 20 or 30 bucks, I know that if the market hits this price, I can get out for around 50 bucks. I always know that, right? Now, I could choose to stay in it. I could choose, if the price gets here, I could say, hey, it looks like it's still going up. I want to hold on to this because I think it will still expire above this and be worth 100 bucks. Or it's still going up. I think I can get a little more, whatever, right? But the one thing we know is that if the market gets here, this binary that we bought for 30 is now going to be worth approximately 50. And I could exit it or I could keep it. Especially, what if the market started coming up, got there, went up a little higher, but then it kind of started to hesitate a little bit. I might decide I want to get out, right? And I know that if I buy it for 20 or 30 bucks and it gets up there to that strike, it's going to be worth around 50. Does that make sense? But does it also make sense that with these lower priced, lower probability, out of the money binaries, the only reason I'd want to buy a binary that's way up here out of the market or sell a binary that's way down here below the market, the only reason I'd ever want to do that, even with the low risk, is because my strategy or system is telling me the market is going to move there. Any questions on that in and of itself, out of the money binaries? Everybody understand what an out of the money binary is and why they are priced so cheap and the risk is so low because of the low probability and why? Any questions on that before we move along here? Ron, you're asking what kind of candles these are. These are what we call diagnostic bars. These are some proprietary bars that we have over at Apex. You can see more about them if you go over there to our website, apexinvesting.com. They're not time-based. They're not minute bars. They're similar to like a Renko bar, where they're 4-tick bars. The market, moves 4 ticks. It makes a new bar kind of thing. So they're tick bars, not time-based. So just a little bit different kind of bar there that we use for some of our things. Let's see here. Graham, if you sell prior to expiry to mitigate a total loss, how do you calculate the lower amount lost when you sell out prior to expiration? It's really easy, Graham. They actually figure it for you here. Let's just say, for example, I'm just going to buy this one right here as an example and demo to show you. Okay. All right. So I bought this binary right here, right? The 0912. See? 0912. That's the one I bought. And I bought it for 59 bucks. Average price means the one how much you paid for it. Okay. Well, if I bought it and I want to get out of it early, I have to sell it. Well, 0912, I bought it. Here's the price I can sell it for. Whatever price is listed here on the bid side, that's the price that I can get out for at any time. Okay. Notice this price right here, Graham, is the same price right here. See this? 54.25, 54.25. Watch when this changes in a second here. 54.70. See that? So this is what I bought it for. This is what I can sell it for, current market, and that's the difference. So right now, if I exit it right now, it'd be $6.75 loss. If the market was going up and all of a sudden I could sell it for, 79 bucks, then I'd be up 20. You see that there, Graham? I mean, you could see it manually, but it calculates for you right here. Here's what you bought it for. Here's what you can currently sell it for. So here's your current profit and loss. All right, so you always know what you can get out of it for based on what's listed right here, but they calculate it right there for you. All right, does that make sense? They're the same thing. If you see them change there, it's the same thing. Okay, current market and position value, same thing. Okay, does that make sense? So that's how you know what you can get out of for. Okay, so that is what is called an out-of-the-money binary. All right, where the market has to move, and therefore they're priced with a much smaller risk. But not only do they have to move, okay, there's the other thing you got to keep in mind. What if your strategy or system is telling you, hey, the market's going up? Like right now, let's just say, for example, whatever indicator, strategy, or systems you're using says the market's going up. Okay, great, market's going up. So, ooh, look, I can get this cheaping right here for 28 bucks. I like that. Okay, but how much time is left to expiration? These expire at 8 p.m. Is the market going to go up in 7 minutes and 46 seconds? Maybe it is, maybe it isn't. But you might want to look at saying, hey, why don't I look at the 9 p.m. expiration so I have over an hour? Or why don't I look at 11 p.m. tonight? So that's the other thing you got to keep in mind with these out-of-the-money binaries is not just, hey, you can't buy one just because they're priced low. You have to have some kind of indication that the market's going up, but you also have to keep time in your favor, because what's going to happen in time to this $26 binary? If it doesn't move up closer to this, what's going to happen to this price the closer and closer it gets to expiration? Is it going to move up closer to 100 or move down closer to 0 because the market's not there yet? Yeah, the price is going to erode. Okay, that's what we call, because again, at expiration, it's got to get closer to 0 or 100. It's called time decay or time erosion. Exactly. So even though you might have an indication that the market is moving and going to move in a certain direction, you still want to make sure to have time in your favor. Okay? So that's an out of the money binary. And again, yeah, you definitely don't want to be trading out of the money binaries in flat markets. You have to have movement to be able to trade those. Okay? Let's see here. Ron, I've watched setting a take profit working order. It always went too fast. I've not figured that out after 30 or 40 times of watching it. This is on Forex binaries. Can you use your open position to show me slowly? Yeah, Ron, I can show you that. Okay, so here's where you're having trouble, Ron. See these prices, how they change quickly? Okay, well, if I bought this, okay, you're asking about a take profit order. If I bought this for $59, let's say that I want to make 30 bucks on it. I'm not going to hold it to expiration. I'm going to get out early, but I want to make 30 bucks on it. And I want to place that order ahead of time. I don't want to sit here and have to watch it and get my finger on the button. I just want it to be in there, right? Okay. So if I bought it for 59 and I want to make 30 bucks on it, that means I have to be able to sell it for what? 89, right? I have to be able to sell it for 89. Well, this contract is the 0912 contract, okay, for 9 p.m. Right now I can sell for 29.32. It's not up at $89 yet, is it? Right? So I can't sell it for 89 yet because it's not there yet. The market has to go up. So what I want to do is click this. Remember we talked about exit in order. I can click it and then boom, exit it. But I don't want to exit until I can sell, because see it's marked sell, until I can sell for 89. And then I do, see I changed it to 89. So I don't want to sell for what the market's currently at. I don't want to sell for what I can currently get out of it for now. I want to sell when it gets to 89 so I can take profit. So I placed that order, but it's not here yet, right? And this order is still open. Well, the reason this order is still open is because the order I placed said don't sell it. I bought it for 59, sell it back when it gets to 89 so I can keep my 30 profit. So where is that order? Well, it's up here in working orders because it's not an open order yet. It hasn't executed yet. It's just sitting here in working orders. My working orders thing is messed up. It's sitting there in working orders waiting till this number right here gets to 89. And when that gets to 89, boom, it'll execute it. Okay? Does that make sense, Ron? Did that answer your question? How to set the take profit order? Okay, you just got to remember to, you know, when you're doing a take profit order, you're doing it higher than where the current market is. Okay? And don't get confused between buying and selling. Okay? Because if you bought it and you want to get out of it, you have to sell it. If you go in and try to buy another one, it's just going to buy another one. Does that make sense? Yeah, definitely play with that in demo and you'll get it down and you'll be like, okay, I got it. So yeah, just play with it in demo for a little bit, especially before you try it, you know, with live. So give that a shot there. All right, excuse me. So let's talk about, we talked about time decay and how the closer you get to expiration, you know, the price is going to get closer and closer to either 0 or to 100, right? So let's say that you had this euro dollar strike and you're selling it saying, or you're buying it, say you're buying it and you buy it for 46 because you think the market's going to go up. Well, the market hasn't gone above 25.40. You're getting close to expiration. Now that binary bought for 46 is only worth like 32 and 36. You get a little closer expiration. Now it's only worth like 18 or 20. Well, why? Well, because the probability is going down because it's getting closer to expiration and it's still not above the strike price. So that price is going down closer to zero. Okay. So, like I said, I'm not telling you to not trade these out of the money binaries. We trade them all the time. I'm just trying to tell you, you have to have a reason to trade them. Don't just randomly pick them because of the price. If you hop over, just to give you a few examples here, if you hop over to our website, apexinvesting.com, like I said, get your free username and password. Right here under Binary Essentials, remember I showed you number 3, Trading System Courses? Okay, you can go through like right here, Sharpshooter and Binary Hunter. A lot of those we use like the at the money binaries, like around 50 bucks. But right here, the Trend Catcher one, we use out of the money binaries for that, like $20 and $30, and we just scalp $20 or $30. This Binary Strangle course, here we're actually using 2 binaries at a time, buying one and selling one, both real cheap, risking like $15 on each side. Like, we actually trade them all the time. We have a few systems here of how we trade those out of the money binaries, but you'll see when you go through there and check those out, we have a reason to do it, not just randomly buying due to low risk. Okay. Let me check any questions here. Eric, that is what you would call a butterfly. Okay. And in fact, if you go right where I was just pointing at here on the website, under Binary Essentials, Trading System Courses, Butterfly. If you check that out right there, that's exactly what you're talking about right there. It's kind of like an iron condor, except iron condors we use on spreads where you're buying and selling. Okay, what and I'll reference that here in a minute. But yeah, with binaries, it's called a butterfly. But yeah, if you check that out, we cover a whole webinar on how to do those right there under binary butterfly courses. Okay. Let's see here, Graham. Yeah, I think right now it's at 44. Yep, because the market's going down, not up. Okay. Abdul, that one would be, you can get all that information right here under Binary Essentials, Trading System Courses. This one right here, the Trend Catcher course, that one talks about how we do the scalps with the out of the monies. That one there. Okay. All right. Okay, let's talk about the final one, ITM binaries, which stands for in the money binaries. And then I think based on what we've covered, you pretty much already know what that means. All right. But what is an in the money binary? Well, let's just look at some examples here. All right. I'm going to get out of this just so we can clear it out of here. Okay. Right here, euro dollar to be above, or let me show you a different example here. Let's see. Okay, so we understand what out of the money is. Those are way out there. We understand what the at the money is, where it's right close to the market. Okay, the market and the strike price are right close together there. And let's take a look here. All right. So this contract here, euro dollar to be greater than 0.898. Okay. Where's the market right now? 0.906. Right? So the market's quite a bit higher. Let's take a look here. Let me just clear everything off of here. Okay. So this contract says what? The euro dollar be greater than 0.898. Well, let's look at a euro dollar chart. Let's find 0.898. Okay. 0.898. So if I buy this strike price right here, what am I saying? If I buy this, I'm saying that the euro dollar will be greater than this price. Well, it's already greater than that price, isn't it? Right? So, where did it go? I'm sorry. Yeah, 0898. So also look where it's priced at. When I buy it for $92. It's getting close to that $100 mark, right? Why is that? Why do you think it's priced so close to $100? Well, I think you can see that because it has a really high probability of that happening, right? Because the market's already above there. Okay? What can the market do? Well, if I buy this strike price and the market goes up from where it is right now, do I win or lose at expiration? I win, right? Because I'm saying the market has to be above this strike price. It's already right here. If it keeps going up, I win. What if the market just went flat and just did nothing and stayed right where it is right here, all the way to expiration, and I had bought this binary? Do I win or lose? I still win, right? Still win. What happens if I buy this binary and the market starts to come down? And it comes all the way down, come on, to right here. And then it expires. Do I win or lose? I still win. Still win, okay? When we talked about out of the money binaries, what did the market have to do? If I bought an out of the money binary way up here, what does the market absolutely have to do? There's only one thing the market can do for that to make me any money at all. If I bought something way up here, what is the one thing the market absolutely has to do? Only one option. It has to move, and it has to move up. It can't stay flat, can't go down. The market can, if I bought way up here, the market can only go up. It has to move and has to move up, right? Out of the money. What if I bought an at the money binary right here? I bought a binary right there, buying, saying the market is going to be above. What does the market absolutely have to do? Only one thing, move up. Right? Does that make sense? If I bought an at the money for 50 bucks right where the market is, the market has to pop over that 50% hurdle, right? Pop over the top of it. Has to be at least one tick in the money there. Has to move up. So with out of the money and with at the money, the market has to go one direction. Right? Everybody follow me there? Has to go that direction. With an in the money binary, if I bought a binary way down here, what can the market do? It can go up, it can stay flat, it can even come down against me as long as it doesn't come all the way to my strike price. Does that make sense of what an in the money binary is and why I have more options there? Now granted, I had to pay more and risk more for it, didn't I? But I have a lot more options, and let's say that I did buy, and I'll show you another example in a minute. I can buy it for 94, sell it for 85. So what is my probability? About 90%, right? That has a much higher probability than some of these $8 ones we looked at, didn't it? So we've got a much higher probability of from a statistical standpoint of the in the money binaries expiring profitable, right? But do I want to be risking $94 on a trade to only make $5? Even though it has a real high probability, is that probably a good thing to do, to risk 94 bucks to only make 5? Not really, no. Even with a high probability. It doesn't work out, does it? But you understand now, though, why it's priced higher. You understand why it's an in-the-money binary. And you understand that when you do buy a binary down here, you have a lot more options for what the market can do. Or if you sold a binary up here saying, hey, the market will be below this, you've got a lot more options, right? Because the market can go up, go down a little bit, or stay flat. That makes sense? Any questions on that in and of itself as far as understanding that you have three options for the market now? It can go up, stay flat, or come down a little bit. Does that make sense? Yeah, David, is this something you would do in a flatter market? Absolutely. Absolutely. Using those in-the-money binaries in a flatter market? Absolutely. Okay? But now, let me show you a little bit different example here. Okay? I just wanted you to get the concept. All right. Let's look at, let me find a good example here just to show you. We've been looking at euro dollar. Now I want to stay on euro dollar because I have the, that's the chart I have up. Okay. Okay. This binary right here, I can buy it right now for about $71, right? Okay. 0906 is the strike price. So let's look here. Let's find 0906 right there. Everybody see that? So if I bought that strike right there for around 70, what was it at? 70, it was about 70 bucks, right? It was 72 a minute ago, about 70 bucks. Okay. How much can I make if I'm right? If I buy it for 70, it expires profitable, worth 100, I can make 30 bucks. Do I really want to risk 70 to only make 30? I mean, granted, it's in the money, so it's got a higher probability, but do I really want to risk 70 to make 30? Maybe, but maybe not. Not really, right? So let me ask you a question. If I bought this one, or no, what if I bought this one? What is my probability of it winning? Just from the number statistical side. About 30%, right? We all understand that. Well, what do we like about this? Ooh, I only have to risk $32 on this one. We like that, right? We all like that. That feels a lot better than risking 70, doesn't it? Because the low investment, the low risk, I like that. I can handle about a $30 loss. I could risk 30 bucks, but I only have about a 30% probability. I really like the 70% probability, right? We like that higher probability, don't we? For this one that we looked at here, I like that probability, but I really liked that $30 risk on the other one. So let me ask a question. My strategy, my system, my charts, my indicators telling me market is going up. So therefore, I want to buy. So I buy this strike price right here. $70 risk, close to a 70% probability. I like that. I like the probability. So if the market goes up, what happens? If I'm right, market goes up, I win. Cool. I like it. I win 30 bucks, right? Market just stays flat right where it is. And then it expires. Again, do I win or lose? I win. I still win, right? If the market comes down all the way to right here, 0906, it comes all the way down, but still is above my strike, I still win. What happens before expiration? Let's say I buy this for 70 bucks. Market's kind of coming up and down, coming up and down. Maybe I was wrong. The market comes all the way down and it hits this strike price. The strike price I bought at 0906. The market comes all the way down to 0906 before expiration. What is that binary going to be worth? No. Before expiration, not at expiration, before expiration. That will make it an at the money binary, right? Because my strike is the same price as the market. And what do we know? Whether it's an hour out, 2 hours out, or a week out, when the strike price and the market price are the same, a binary is worth 50 bucks, correct? So when I enter this trade, I risked 70 bucks to make 30. Because I think the market's going up. What if I'm wrong and the market comes down to my strike? What could I do right there? I could get out of the trade, right? I could exit that trade. And what confidence do I have? What is it that I know, whether a binary has an hour, 2 hours, 12 hours, or a week to expiration? What do I know my binary would be approximately worth? Around like 45, 50 bucks, right? So if I bought it for 70 and I got to get out of it at around 45 or 50, what did I lose? 25 bucks. Right? Everybody follow me there? I bought it for 70. The market comes down against me, hits my strike. I get out of it at 50. So what did I lose? 20 bucks. What could I have made, though, if I was right and it expired profitable? 30 bucks. So I like getting this in the money strike that has more like a 70% chance of winning as opposed to an 8% chance, right? I like this higher probability. We all like that, right? If we're going to trade, I want a 70-something% probability, not an 8, right? So I like having a higher probability, but I don't like risking 70 bucks. But I don't have to, do I? Because I know if the market comes down and hits my strike, I can get out of it around 50 bucks. So I take advantage of one of these in the money strikes that has a higher probability because it's down here below the market. But I don't have to take on that whole $70 risk to get that probability. If I know I can get out of it, if I can buy it at 70, get out of it at 50, I'm only risking 20 bucks to potentially make 30 bucks and to be able to utilize a high probability strike, not a lower one that's way out here. Does that make sense? Did I lose anybody there? Let me know if I did, because this is very, very key. Like, this kind of wraps everything I've been kind of covering with you tonight was ultimately to get to this. This kind of wraps the whole thing up and really kind of puts it all together for you. Okay? Does that make sense? Okay, JP says then you must take, yes. If you do that, then yes, you must take that loss. If it comes down and hits your strike and you get out, Well, what if it comes back though? That can happen. But what if it doesn't? Would you rather take a $20 loss and stick to your system, or boom, take a whole $70 loss because you held on to it just hoping and maybe it'll come back? You know what I mean? You got to stick to that. You got to stick to that system. Okay? So that's kind of where I was wanting to ultimately get to with this. And I'm not pushing you towards just in the money binaries. I told you we trade them all. My point was, do you now get the power of understanding that an at the money binary is going to always be worth close to around 50 bucks? And you see why that's important to know that now? Because if you know that when the strike is 0908 and the market's 0908, it's around an average of 50 bucks. And if you know that, you know where you can put a stop of, hey, I think the market's going up, so I'm going to buy down here. But if the market, and I'm wrong and it comes down to there, I'm going to get out of it around 50 bucks. I know going into it, even if I paid 75 for it, I know I can get out of it around 50 if it comes down. Okay, does that make sense? Of some of you are like, okay, fine, out of the money, at the money, who cares? That's why you care. It's because, like I said, you guys love, oh, look, $29 risk. I like that. You can still get this one right here, or this one right here, or this one right. You can still get an in the money binary that is below the market, has a higher probability, and exit it early, and still only have that $20 or $30 risk, but put probability in your favor. Okay? But to do that, you have to be disciplined to exit when it gets your strike. Okay? All right. Somebody asked to please repeat it, so I just want to cover it briefly. Let's look for real quick at this example right here. This contract says the euro dollar would be greater than 0906. Well, right now the market's at 0909. So the market's already greater. I can buy it for $72. 0906. So here's the market right now. The contract I'm going to buy is right here at 0906. Okay? So when I buy this contract for 70 bucks, I'm saying the market's going to expire above this price. Well, it's already above it. It's already above it. Okay? So as long as the market goes up, or if the market stays right where it is, or even if the market comes down to right here, but doesn't come all the way to the strike, I still win because I'm buying so far below here. The market can go up, come down. As long as it stays above this strike, I win. It expires profitable. I bought it for 70. It'll expire being worth 100. So I made 30 bucks. Okay? But if the market comes down and hits this price, like before expiration, and hits this price, I can just get out of this trade. I can exit it early and get out of it for around 50 bucks. We know that. We've shown those examples. So I bought it for 70, saying the market's going to go up and stay up. But if I'm wrong and it comes down, I don't have to risk the whole 70 bucks. If it comes down and hits that strike price, I know I can get out of it for about 45 or 50 bucks. So I take a $20, $25 loss on it. But if I was right, I would have made 30 bucks. So I can risk 20, 25 to make 30. That's a good risk reward. I don't have to risk 70. I don't have to risk 74 to make 26. I can risk about 25 to make 25. Does that make sense? Okay. And so yeah. Let's see here, Graham. How do you know it's at 50% when you have to get out of it without opening up the chart? Well, Graham, you should never be in one without opening up a chart, first of all, okay? Because you don't want to just randomly take trades without looking at a chart. Like the only reason to ever get into a trade ever is because you're looking at a chart and you have a strategy or system that you're following, and whatever indicators and system you're using is giving you an up signal, telling you the market's going up. So you would have a chart open already to enter the trade, okay? Now, if for whatever reason you entered a trade and then had to close your chart, well, all you got to do is look right here. When you get into a trade, for example, let's say we did buy this one, okay? So, all right, Graham, so I entered that trade. I bought it for 75, okay? So if it expires in the money, profitable, I can make 25 bucks on it, right? But if it went down, see, look right here. What is this strike? 0910, what's the market at? 0911, real close, about 50 bucks. So I bought this strike price right here, 0906. Let's say for whatever reason I had the chart closed because I had to after I entered the trade. All I got to do is just keep an eye right here on this Nadex indicative. See, it's at 0911. So if I see this starting to go against me, and I'll also see this, number going down here too. If this 0912 gets down to 0906, I get out of it. I open it and get out. Okay. Does that make sense? If for some reason you have your chart open, you enter the trade, but you had to close your chart for whatever reason, all you got to do is just watch the indicative right here, and you'll see, it's listed here or it's listed here, and you'll also see your pricing get down, to around 50. As soon as this hits that, boom, you can get out of it. Okay. David, you can enter this take profit order, but you cannot enter a stop loss ticket on Nadex because everything on Nadex is a limit order. Meaning, if I said right now I want to sell this for 50, what I'm saying is I want to sell it for 50 or more. And right now, I can sell it for 77, so it would fill me automatically. It would totally fill me automatically. Okay? So that's why I can set a take profit order, because I can put that as a working order because the market hasn't reached that price yet. But if I enter something below the market to sell it, it's going to sell it higher for me because I can sell it higher. Okay? Yes, Susan, exactly. Yep, you get out at the strike price that you entered the trade at. So right here we bought the 0906. If the market came down to 0906, boom, get out of it. Okay. Let's see here. William, I placed a demo trade and the price was in the money, but it still shows a red for profit. Yes, that's correct. That's always going to happen. Look right here. See this? Well, look at this one. This is deep in the money. 0902, right? I can buy it for 92 bucks. But what can I sell it for right now, William, to get out of it? 83. So it's automatically, as soon as I get in that trade, even though it's an in-the-money strike, it's going to automatically right away show me as being down $9, because if I want to sell it right now to get out of it, that's what I can sell it for. That P&L is just showing you right now if you want to get out of it, what you can get out of it for, not what it would be at expiration. Does that make sense? Okay. So anytime you enter a trade on Nadex, it's almost always going to immediately show you a few dollars down because it's this difference right here of the buy and sell. Now, as the market starts moving in your direction and time goes by closer to expiration, then these prices will start to go up. Okay. So yeah, you got to get past that bid-ask spread there. Does that make sense? It's not going to automatically show you, profitable yet until the price comes up to make it profitable as far as what you can get out of it for immediately. Okay. So yeah, don't necessarily watch your P&L for getting out. Exactly. Don't watch this for getting out. You always watch your strike. When the indicative gets to the strike, you get out. You're not looking at your profit and loss. You're not trading off of emotion or a P&L number. You're trading off of, if I bought this strike here, I'm getting out when the market hits that strike there. You're just looking at the price, or you're looking at the indicative, not the price. Does that make sense? Yes, just the facts. You're trading what the chart is telling you, not what your emotions want to tell you by this number right here. Okay. So Steve is pretty close. It might be a couple ticks off. You just have to, it all depends on, you know, like right here, what are we at? 91.01 right here, 90, I'm sorry, 09.10 compared to 09.102. I mean, they're real close there. Okay. Let's see here. Okay, let's let's see here. Just trying to catch up on some questions here. JP, that means good till close. Well, Steve, the Nadex indicative, the way it works is basically the Nadex indicative, like with Forex, for example, I believe. What they do is they take the last 30 transactions, like the last 30 orders, they get rid of the top, the highest 5, the lowest 5, and they average out the middle, or maybe it's 25. That way you're not hit by like the last little spike, you know, because with a binary contract comes down to like the 10th of a tick and somebody or some institution placed some big order at a higher price, it's going with like a mid price, all right, to protect you from those spikes. Okay. Let's see here. All right. If I'm long at a certain strike price, then Eric, let's see here. If I'm long at a certain strike price, then short at the immediate strike price below my long position, is that as close as I can get to a straddle? Let's see here. You could do that way. The way we do straddles, though, a little bit different. We do straddles with Nadex spreads. Can't really do an ideal straddle with binaries. We do them with Nadex spreads. If you go on our website here under questions, trading questions forum, let's see here, go down to, or you can even just search it right here. I'm sorry. Let's do straddle. Let's see here, right there, placing a straddle trade. Okay. We do straddles with the Nadex spreads, and we do what's called strangles with the binaries. And again, if you're here on the Binary Essentials tab, Trading System Courses, Binary Strangle course. Okay. Eric, you probably want to check out this one right here, Binary Strangle, Binary Butterfly. Between those two, it'll give you a couple good ideas there to do what you're looking to do. I understand what you're looking to do. You're actually much better off with the Nadex spreads to do those type of straddles than you are with binaries. But with strangles and butterflies right here, shows you a couple ways to kind of make binaries work for you there. Okay. David, if it were me in volatile markets, right here, binary strangle course. Check that one video out. That's where we use out of the money binaries, and we actually use 2 out of the money binaries. What we do there, basically, when you go and watch the video, you'll see what we do there. Let's say it was a real, and I don't want to get too far into this to confuse people, but it's all there in that video if you check it out. But let's just say that it was a real volatile market, and the market is just going crazy, up, down, like volumes exceeding, like it's not a clear trend up or down. It's not flat, like it's just up, down, craziness. Basically what we're doing there, David, is we're using out of the money to buy and out of the money up here real cheap, like $15. And let's say the market popped up there to it, what's it going to be worth? 50, 60, right? And at the same time, selling an out of the money binary down here with a risk of like $15. Okay, so it's like a $30 risk trade because we're not sure which way the market's going to go, but if it pops up there, we take profit real quick, absorbing the loss on the other side. Okay, and so anyway, I don't want to get too detailed in that and confuse people, but if you want to know what I'm talking about there, if you go under Binary Essentials courses right here, Strangle, so we call it binary strangle. We're kind of strangling the market. We're kind of, getting our arms around both sides of it, not sure which way it's going to go, but we're doing real low risk on each of them. We're buying and selling, so we're not sure which way it's going to go, and taking profit on one side. Now, again, that's not a just, oh, I like that, I'm going to start throwing cheap stuff out there. You have to do like David specifically asked, was in a volatile market. The market has to be moving. There's got to be volume and so on. Okay? So, all right, guys. So we've been through that. Out of the money, at the money, in the money binaries, how they work. I've showed you where you can get some more information there on the different trading strategies and systems here under the Binary Essentials. If you go and check these out, some of these different systems here are in the money, some are out of the money, at the money. Check those out and take a look. And just like I said, always have a reason for doing what you're doing. Always use your charts and indicators and strategies and systems. Don't just randomly go buy stuff or sell stuff because you like a price or you like the low risk. You really have to understand that each one is there for a different reason. Okay, there's different times to use out of the money binaries when it's volatile and moving. There's different times to use in the money when the market can be flat. Next week, we are going to, I know it's a holiday week coming up here, but next week we will have a webinar next Monday night. We talked about spreads tonight. Next Monday, I'm going to go back and talk about, talk about binaries tonight. I'm going to talk about spreads next week. And basically what we're going to do next week is we're going to talk about the misconceptions with Nadex spreads. And it's basically the same webinar we did tonight, but regarding spreads, meaning, hey, there's a bunch of different spreads out there. Which one do I choose? Some people have said, oh, I've tried those spreads, but the market moved. I didn't make a whole lot. Well, probably because you chose the wrong spread. Just like you see tonight, if you choose the wrong binary, doesn't always work out for you either. You know what I mean? So we're going to kind of put this same information we did tonight into spreads, help you understand spreads a little more, going back and forth between binary and spread webinars, mixing it up a little bit. So join us next week for that, Monday night at 7. Even though it's the holidays, I will be doing that. If you hop on over here to our website, apexinvesting.com, right here, this weekly webinar schedule, just want to show you one thing. Yeah, we're not going to be having some of our normal Thursday webinars this week, but right here, and you can find this on the Nadex website as well. I'll show you where, but right here we've got the Nadex holiday schedule, market hours. If you're kind of looking for a place to find all of the market hours and Nadex hours all in one place, it's right there for you. Kind of show you what hours, the exchanges will be open up this week, and we'll have that up there for next week as well for the New Year's week also. So, all right, guys, once again, I really appreciate you taking the time out to join us tonight. Hope that helped. Hope that helped clear up the world of binaries for you a little bit here. So I will get this webinar recording up here within the next hour, and I hope all of you have a great trading week and a great holiday week with you and your family. If you're traveling this week for Christmas, wish you a safe time on the roads and a great time with the family. Enjoy it. We will see you back here on Monday night at 7 p.m. Eastern Time next Monday. All right. All right, you're very welcome. Thank you. I'm really glad it helped. Definitely helps to clear up and understand, hey, we've got a ton of different binary options here, why one over the other. So if you have any other questions, feel free to hit us up over on the Apex website here under questions. You can submit a help desk right there. We'll answer any questions we can for you, get you forwarded over to the proper video or training course or whatever we can do to help you out and help clear some things up for you. All right, guys, have a great evening. Thanks for joining us and happy holidays.